What's going on, traders? Kyle from K Capital. It is January 16th, about 1:20 Eastern. Hopefully everyone is having a fantastic weekend. Getting right to it, it's been a very interesting start to the year. To be specific, it's been probably one of the worst starts I've ever seen in a very long time. I said this last week, and it pretty much came to fruition on the dot. We were going to test 1600 in the Dow, and we did exactly that. What you're currently looking at is the Dow index on a daily time frame, with the EMA ribbon kind of overlaid, going from the 20 EMA all the way to the 200. For beginners, more or less what that means is these are exponential moving averages set to that specific time frame in terms of days. So 20 is 20 days. The difference between the simple and the exponential is the weight that the current periods are given versus the back end, right? So what does that mean? For the 20-day moving average, if you just did a simple moving average, it's the simple move average between the prices for those 20 days, from day 1 to day 20. The exponential is weighted more towards the current or most recent days, so it gives a little more validity to the actual prices. So I use EMA, as you probably have realized at this point, if you've been with us for a little bit now since inception, or more recently, you've definitely caught that probably in the charts, the watch lists, and the videos. But nonetheless, back to the market. So we are testing support. Again, like I said, I think this blue line is actually from the last video or the last chart I put on the dashboard. And we hit that to a T. If we break through that, it is not necessarily a pullback anymore. It's going to be a full-blown, I don't want to say recession, but it's going to be a full-blown drop. There really won't be much until probably 15.5, 15.6. I really hope not, but down to 14.7, 70. That's the areas we're looking at if we kind of break through this. You can really go into a lot of different theories about why. I think simply it's quantitative easing is now done. Interest rates are going to go back up. People are moving out of stocks and are going towards long-term treasuries, bonds, corporate bonds. And really that's the sell-off. And that was expected, to be honest, kind of across the board. No matter who you listen to going through the end of 2015, you kind of got the sense that things weren't really going to be that bullish in the short term in 2016, and it's pretty much been dead on. The technicals supported that. Once we crossed the 200-day moving average, it really was just a matter of time. We would obviously drop like we did in the summer. We would test that high, and we would pull back. The 200-day moving average is very, very telling when it comes to the overall macro trend, and that kind of takes me into where we should be with our swing alerts, and we're obviously going to be short. You don't want to trade against the overall market because everything will be going against you. So, especially in technical trading, it just doesn't make any sense. It's not intuitive. We don't do it, and it's very, very rare you'll find any short-term traders trading against the overall market when it comes to technicals. So, with that, let's take a look at NCTY, which I think we're up 15 to 20% right now. Last week this actually held up really well, and I was pretty surprised given the overall market. There was definitely buyers, throughout the week at this level. Fortunately, I should say, because we're short from 329. There's also sellers, and this 20 EMA continues to serve as pretty solid support, which is good. Next week, I definitely want to see a continuation and a break of this 260, 265 level and a drop. If we don't, we'll close and we'll take the profit. So that's kind of where I'm at with this. I just don't want to be too patient with it. Hold and then see a spike back up to 3 or something like that. So it's good that we're seeing sellers. Obviously, it's just a matter of now, seeing this collapse and hopefully break down to the 200-day moving average. Going right to the watch list. Actually, no, let me do our one long. MDXG. Excuse me, just needed a drink of water. All right, so this is holding the trend line continuing all the way back to the beginning, I think 2014. If we weren't in such a crappy market, I'm almost positive buyers would be coming in here and scooping this up, and then we'll see a test of 11 or 10. Unfortunately, given the environment, we're not. This continues to hold, though. I haven't moved this trend line since we started really watching MDXG and since we went long. So we're down $1, but that said, it's not like this has been manipulated. It's continued to hold this level, which tells me there's buyers at this level. There's support here. I just wish the market wasn't too crappy. I mean, once we see really a break of this trend of the EMAs, I might be a little bit cautious and a little bit bearish. But right now I think we're still holding several levels of support. So hopefully we see this tick up, and then hopefully test the 200-day moving average, and then obviously eventually break to 10 or 11. So still holding that. No really news there. To the watch list, I have 5 new stocks, all short. ARTX has been on the watch list for some time. So given the environment right now, as you can see, anytime this has tested the 200-day moving average since probably mid-2014, it's really sold off and just dropped. So right now I think we're seeing a nice run up. We're going to see the EMAs start to tip. We're testing the 200-day moving average now. I think once that's broken, we'll go short, and it will really mimic the pattern here to where we broke the 200-day moving average after a nice run up, go short here, let it just drop, and I think it's going to do exactly that again, and it's going to drop all the way to 1. So it's a nice gain, 50% from the $2 price range. So watching that for a test of the 200-day moving average. ATVs, another one that was on the watch list last week. This is obviously a risky play. Any stock that goes from $1 to $20 in a day, I think is safe to say it's a pump and dump. So it would have been fantastic to short up here, but naturally we wasn't on the watch list at the time. So with that, pulls all the way back down to $3, $4, gaps up, and you continue to see sellers at that area. So that area is really going to be, right. Again, this was a scientific area of support and demand, but it gives you a general sense of where sellers are and where buyers are. I think if we test that level, the 650 to 675 level, and break that, we definitely fill this gap, and that gap is pretty wide. So you're talking 650 all the way down to technically 450. So that's what I'm really looking for right now in terms of the setup. To be frank, let me take a screenshot of this and throw this on the dashboard. So that's what I'm looking for here, and I think there's enough sellers right now to where I think that does happen. The environment, the macro environment is going to add to that, so I think this does test this gap, and that's really what I'm looking for. I don't want to buy until we start to test this. Volume kind of dips down like it is, and then we just see a complete sell-off. So that's what I'm looking for there. If we go to SJR, so this one I think is more of a long-term short. Again, once we sold off into the 200-day moving average, completely dropped. We tested the 200-day moving average. What's interesting is I want to see it break this low, and it did that, but then it got bought right back into the low, and it's hard to see that because I have the dividends added to that. Let me zoom in here. There we go. So you can see this has basically been tested 4 times now. 1, 2, 3, 4. It broke it, but then it rallied right back up. Once we break that and we just start seeing a complete sell-off again, I think we'll definitely just drop. And if you want to look at the weekly, because it might give you more of a sense of the trend here. Alright, so that's going all the way back to 2010. So you can see that, it's definitely a bearish story here. And I think, this rally last week was just completely, people just got out right away because they probably wanted some form of bounce to sell off, recover some of their losses from here. So that tells me that there's definitely downward pressure, and I think this definitely continues to collapse. So that's another one I'm looking at, and to be more specific, I'm looking for a test of this low here. So the low, or support I should say, is probably going to be the 16.5 to 16.20 range. And I want to see a complete sell-off here, and then once we do, we'll go short and hopefully get a point or two out of that. Next, and these two are definitely new, is NVLS. Another one that rallied, Friday. Any rally though over the last couple months have been, it just completely sold off. So I think this may test the 20 moving average or the 25 moving average. We'll see an uptick, we'll go short, and then we'll hopefully for $1 point down once it tests 650 to 7. we'll expect that trend to continue downwards and hopefully lock in a $5 price target in that position from 7. So that's a nice return, hopefully in a week or two. So that's another one. And my favorite of the list is CDRB. So this has just gotten demolished, down from 20 to 2 in the last year. Actually, frankly, last 6 months, 8 months. So, it completely sold up here or bought up. Huge volume, but as you can probably see, the majority of that volume was more or less selling. So you have a nice green candle here, but people obviously sold off into that uptick, right? So rallied all the way up to 6, but I'm pretty confident. I can go back and take a look. The majority of the people in this position sold or went short when they saw that rally from 366 to 6. So it could have been profit taking twos, but either way, it's definitely just tells us that there's selling pressure here, and that I think this is something that is definitely going to fill the gap up from 2 at a minimum. It's just a matter of when. So I'm going to look for that to kind of break down further. If I want to kind of go into more detail here, let's take a look at the 15-minute. Or not. Alright, so the 1 minute was pretty choppy. So what does this really tell me? Frankly, it just tells me the 200-day moving average is continuing to serve as solid support, or resistance. Here's the gap. This is pretty thinly traded, it looks like, but it had a lot of volume Friday. So, I think it's pretty safe to go short here. You can see we're starting to test this area. If you want to go across from the gap, gapped up here, rallied all the way up, sold off, came back up. Saw a little bit of buying, some high volume coming in, but again, sold off in the 200-day moving average. I think this may test, like I said, this 200-day moving average and then just sell off again, which, you're looking at $1 profit on a $4 stock. That should be a good rep. So let's take a look at the daily one more time just to make sure I'm reading this right. Yeah, I think this is safe to say that, this is definitely a story to where you're seeing downward pressure. So, let's add this to the watch list. So that's 6 stocks, or 5 stocks, I should say, that are on the watch list ready to be shorted. So hopefully, you guys add these to your watch list too. Shoot us an email if you have any questions. We're happy to discuss, happy to, go over different options if you guys see anything on your watch list. But hopefully have a great weekend, and I will talk to you guys Monday.